Here we go. It's going to be an epic week for December, the week of December 14. Last week was my birthday. It was epic as well. The volume in this video is a bit higher than normal because someone complained to me that they couldn't hear the last stock picks video volume. I think it was their computer's problem, but if not, please tell me in the comment section below. Say, you're too loud, Damon. Shut the fuck up. Today is going to be an epic video because, in my opinion, next week, this coming week, is going to be an epic week for the stock market. Mainly because of the Fed's meeting, where they will probably raise the interest rates. And that will be a huge factor in multiple markets, mainly the general stock market, which will probably fall. If I'm correct, the stock market's going to crash a bit, maybe have a correction this week. That's going to be good for people shorting stock. It's also going to be good for certain types of stocks. For example, bank stocks. If the interest rates rise, banks will see their profit margins rise. So getting in on a bank stock like the Bank of America or JP Morgan would be a smart idea at this time. But according to my analysis, maybe I have that graph still open. I do not. Let me dig into it. According to my analysis, you probably don't want to buy a bank stock exactly now. You want to wait 25 days from the meeting, which is going to be, the meeting's going to be on the 16th, and 25 trading days from the 16th, it's going to be on January the 20th. So if you want to buy, if you want the best gains for a bank stock, wait until January 20th and then buy a shitload of bank stocks. I like Bank of America. I like JP Morgan. I can look into other ones if you're interested. Please leave your requests below if you're interested. But as always, we're just going to do weekly stock picks. I'm just going to give you the stocks that I believe will move decently this week and you can make a bit of money on. All right. So yeah, what's going on this week? Basically, that's it. Interest rates will probably raise after the meeting on the 16th, Wednesday. The announcement will either come on Wednesday or Thursday, and you will see markets dive downward a bit. And you'll see bank stocks go up and some other stocks also go up. Alright, so let's talk about my 5 picks for this week. But let's also talk about one pick, which is a short, not a long pick. All right, we will start with, what are we going to look at today? We're going to use Candlesticker, I think, candlestickchart.com, to look at what happened last week. All right, so we're going to start with GDX. Now, there are 2 really good ways to play gold. There's 3 actually. All right, the first one is gold, the ETF, GLD. That's actually buying gold. Alright, so if you buy this or you short this, you're buying gold or you're selling gold. Currently, I'm shorting this. I shorted, I believe, around here at 103, and I believe it's going to fall downward. Yes, one thing to note, by the way, is if interest rates rise, gold is going to get a little confusing. Gold will probably fall because if interest rates rise, it means smart investors, long-term investors, hedge funds, institutional investors, these people will take their money out of gold and put it into bonds because gold has no yield. And if interest rates rise, bonds become more enticing. So gold will probably fall. But there's a second issue with the interest rates rising. And if I'm too loud, I apologize. Just turn the volume down on YouTube. But the second issue here is simply if interest rates rise, a lot of stocks are going to crash. Fear is going to enter the market. So people are going to start taking their money out of stocks and putting their money into things that they believe are safe, such as gold, which is really not that safe. So you're going to get a bunch of dumb investors, and I'm not calling you dumb if you like gold, because actually I'm long and short on gold. I'm hedged on gold, basically. But you're going to get a lot of less informed investors putting their money into gold, taking it out of the stock market and putting it into gold. So that might make gold rise. But the interest rates will also give reason for gold to fall. So if you want to play it safe, don't play gold. If you want to play it risky, I am of the opinion that gold will probably fall and then bounce back during the week. So here's what I'm going to do. I'm going to tell you what I'm doing right now, right? And then you can think on your own as to what you want to do. I'm going to short. I'm already short on gold. I believe that gold is going to fall after the results of the meeting on the 16th, when the Fed says we have raised interest rates, and gold will fall. After that, I'm going to get out. I'm going to sell. I'm going to buy back my short position. I'm going to take my profit, and I'm going to hold on to GDX, because GDX tends to move faster than GLD. GLD, what is GLD? GLD is simply gold. It's a fund where you put in American dollars and you're essentially getting a piece of gold in your brokerage account. GDX is a bit different. GDX is another ETF, but it's a collection of gold miners, which are companies that mine gold and then they sell gold for a profit. Now, GDX, according to my analysis, that you can find, well, you're going to have to sign up and pay for it if you want. But if you go to Seeking Alpha, Platinum, Damon, Varial, you'll find my newsletter somewhere around there. You'll find it in there if you dig around. But if you sign up for that, one of the back-end paywall articles that I don't release to the public because I think is a really good article. My best articles I put in behind the paywall, but just for my YouTube followers, because there's only like 600 of you, and I know you're loyal. I'll tell you that GDX, according to what I have done in my research, GDX tends to move before gold. Tends to have for example, upward movement in GDX implies that gold is going to move upward. So it's kind of contradictory because these guys are selling gold, but the profit of these companies seems to come before the profit of actual gold comes, which is just, I mean, it's explainable. It's just a little weird in terms of common sense. But as you know, probably the market doesn't really work in terms of common sense. Anyway, here's GDX. So this is the first pick of the week. Check it out, GDX. And I'm going to say GDX is a good pick if you wait until after the FOMAC meeting. You know what? Oh, I just realized something. I have another image that I will show you. It's pretty important. So give me a second. It's actually pretty recent. But it tells you when to buy gold after the FOMAC meeting has adjourned. Now, where is that? Maybe this is another one behind my paywall. I don't know. I write a lot of articles, so I kind of forget. But I don't think it's behind the paywall. I think all you need to do... Oh, here it is. Okay. I found it. Alright, so here is when you should buy gold after the FOMAC meeting. Alright? 15 days after the meeting. So, wait for the meeting. If the interest rates really do raise, and you want to buy gold, buy it 15 days after the meeting. Alright? If you want to short it, short 27 days after the meeting. So it's basically the same as what I just showed you. The same as bank stocks. You're going to do the opposite. So around 25 days, 27 days after the meeting, if you want to really play this Fed interest rate rising stock play, what you do is like 25 days after, you'll buy a bank stock and you will short gold. And if you want to swing trade it, wait 15 days after the meeting, buy GDX, sell it when you've got your profit region, wherever you want, and then short it on the 27th. So you could do it like this. Buy 15 days after FOMAC, then sell it 27 days after FOMAC. And that should give you profit. Statistically, regardless of whether the interest rates are rising or not, statistically that's a profitable trading strategy. Okay, so I'll say it again. Buy GDX or GLD 27 days. Sorry, let me repeat. Yeah, okay. buy GDX or GLD 15 days after the meeting, then sell GDX or GLD, and after you sell it and take your profit, buy a bank stock like Bank of America, BAC, or JP Morgan, JPM. That would be a great position trade, not necessarily a swing trade. I just wanted to point this out. GDX was really the first thing that came to mind when I was thinking about this hopefully epic week. Don't buy this week. Wait 15 days. All right. So that's GDX. Now let's look at BLT, a delicious sandwich, also known as, I actually forget. When I eat BLTs, I take off the L. I just eat the BTs, and I don't put mayonnaise on it. Little piece of advice for you guys. Alright, BLT, I don't know what they do. I don't care what they do. But I do care about this huge gap right there. Now, what's interesting about this gap is that this gap was caused... Look, the stock price doubled. You couldn't have really predicted that. What happened was this company was acquired by a bigger company. And when that happens, you either get a... okay, when you have a gap this big, and the gap is of the company's own doing. For example, they have developed a new drug, it passed phase 3 trials, and now they can market it. That would be of the company's own doing, and the company will probably do well in the future. But what we are seeing here is not of the company's own doing. In fact, what we're seeing here is more like someone saving the company, because what happened was someone bought out the company. So the idea here is, look, we had this stock that was basically a penny stock. It was always at $5, around $5. Shitty stock. Someone bought it. Some other company, some bigger company bought this smaller company, and because they bought it at $10 a share, look, it's not even at $10 a share. Because they bought it at $10 a share, the stock jumped up to $10. But look, on the first day when they bought it at $10 a share, it wasn't trading at $10 a share. That means investors don't believe it's really worth $10 a share. So the stock is going to take a dip. And you could see on the second day, it really did take a dip. Look at the selling that happened on that day. This is not a long-term short, but it is a short-term short. So if you want to take advantage of this huge gap, short the stock or buy puts on BLT. Now here's the idea. We don't want to short it for a long time. We don't believe that this gap will fill. Of course not. This company has been acquired by a smarter, more profitable company, and the company will probably turn around to some degree. But the fact that that company bought it at $10 doesn't mean that the stock's worth $10. It probably means that the offer was highballing the real price of the company. Investors realize this, and they're starting to sell whatever they were holding on to. And that's probably going to happen for at least a couple more days. So right now what we can do is short this or buy a put option and wait for the inevitable, in my opinion, drop, or statistical. Let's say statistical because it's more realistic. Wait for the statistical drop. I can't tell you how far it'll drop, but the stock price will probably drop. And in 2 days, exactly on the same day as the meeting on the 16th, sell or buy to cover, take your profit. This is a really short swing trade. It's a 2-day trade. Short this BLT stock. Take whatever money you get from shorting the stock and buy a bunch of BLTs and take off the lettuce, take off the mayonnaise, put on some Dijon mustard and enjoy it, because you deserved it if you actually made this play. All right, this stock is not worth $10. This gap, if you've gone through the gap game plan, I always advise people, like at the very beginning of the gap game plan course, if you've taken it, I say there are gaps worth trading and there are gaps not worth trading. And when I talked about the breakaway gaps, the gaps that you see a huge shoot up, usually breakaway gaps continue upward. But gaps with really low volatility and really low volume, as you can see here, are not worth trading. And this is a gap that's not worth trading on the long side. but it is worth trading on the short side because it's overvalued at the moment. It's going to be overvalued for probably just a couple days, and then it's going to look like what it looked like before, just a sideways trending stock until something fundamentally changes about the company. So, you know, short the stock. It's very low risk to do that for this kind of stock. Just short it, take your profit, buy a BLT, buy a beer, and enjoy your night. All right. So that is our short play of the week. Now we're going to look at NSC, and I believe NSC is an actual real gap play here. Yes. So as you can see, we have a down gap. See how the candlestick here and the candlestick here don't really cover each other? There's a little hole between 90 and 92. That's a gap. That's a down gap. And the gap has already started to climb and start to fill. But luckily, we're not getting in too late. If we buy this stock now, the stock will move from $90 to $92. Statistically, area gaps always fill. Even this area gap. See the last area gap where we have a big gap between this red and green candlestick? Statistically, that will fill within a couple weeks. And it did. Look, boom, 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 boom. And on whatever date this was, that gap filled. You see how the price crossed that empty area? That almost always happens with area gaps. And we have another area gap right now. So, I mean, you can be 99.9% sure that this gap is going to fill within the next couple days. The only danger here, and I'm going to move that 99.9% to like an 80% because of that FOMAC meeting that's happening on Wednesday that could send the market into a frenzy. All right, so that's the risk of this area gap play. Usually area gap plays are super safe. If this week wasn't so special, I'd say this is like a 99.9% certain play. But you know, dude, you buy a call option on this. Look, you buy a call option on NSC. That's $200 profit for every call option you buy. Let me find a good one for you. All right, I'm gonna find a call option that'll work out. What's going on here? Okay. Alright, so look, here's, if you don't have a call option, if you don't have an account that allows you to trade call options, you really got to get one for next week, alright? Because it's less risk, especially now where people are getting fearful. But it also allows you to make a lot more profit than people who trade stock with less money. All right, if you're not rich, if you only have a few $1,000s and you want to make a lot of money trading, play options, don't play stock. So here's NSC, and we're going to look, here's the idea. You buy a call option on NSC. Right now NSC is a little below 90 bucks. The area gap fills at $92. So that's your price target. Now, if you get the right call option, I'm going to show you which one's the right call option for you. If you get the right call option, you're going to make $200 per call option because it moves from 90 to 92. You got a $2 gain in the stock price. You should get a $200 gain in the call option if you choose the right one. So I'm going to find the Greeks and I'm going to arrange by delta. All right? The best delta is this one. It's going to cost you $1,000. But I'm going to arrange by delta by cost, and I'll get you a better one, all right? Okay, so this one's only going to cost you $100, and you're going to get $20 per move upward. I don't really like that. Let's arrange it by gamma. All right, this one's good. All right, so this is my pick for you. If you want to play call options on this stock, this call option is going to cost you $150. That's all. It's only going to cost you $150. If we're right and NSC moves up to 92 and you sell this call option, your gamma plus your delta is probably going to net you, I'll say it's going to net you around $100. All right. So you spend $150. This gap closes. Statistically, it should close in a couple days. And in 2 days, you've made essentially, what's 100 divided by 150? So in 2 days, you made 66% ROI. Contrast that to the stock market in general, which only makes 7% per year. Well, guess what? You're now more successful than most traders, right? So if you want to buy a call option on this, buy the January call option with the strike price 95, all right? And then sell when that gap closes. That's it. Quick swing trade. The only danger is whatever happens to the market after that Fed meeting on Wednesday. Okay, moving on. Penny stock. A lot of people like penny stocks because a lot of my followers are poor. You see this gap here? Ignore it. This is not a gap play. This is a bankruptcy play. Ignore it. I'm saying ignore it because it looks like an area gap. Actually, let's pay attention to it, okay? Alright, it's not an area gap. I'm going to tell you why. First of all, look at the volume. You see the bar, the red bar below the candlestick associated with the gap day? It's huge, right? When a bar like that is so big compared to all the other bars, it means that there was a lot of trading going on that day. So something weird happened. And I didn't actually look this up. I don't know what happened. I honestly don't really care what happened. All I really know is that this is a company that is not worth trading. It's basically going bankrupt. And at this time, people realize that. We can look into it if we want to. I mean, I suggest if you want to play this one, really research this company. But this is a company going bankrupt. And a gap with a huge volume and that breaks out of its trading region, realize in the past it had not dipped below 50 cents. Now it's below 50 cents and it actually touched 25 cents. This is a stock that just rebounded, so if you want to short this, if you got balls, this is a stock really worth shorting. Just rebounded. This is not an area gap. This is a continuation gap. This is a realization that the company's going bankrupt. It's going to go all the way down to zero. Now, it doesn't look like you can make a lot of money shorting a stock that's going from 40 cents to zero, but yes, you can. If it goes from 40 cents to 20 cents, you've made double your investment. So if you have the ability in your brokerage account to short this stock, short it if you got balls. It's always nerve-wracking to short a penny stock because a penny stock can explode. But this one, I really doubt it. I've looked in to the company itself. This company is 90% certain going bankrupt. So in my opinion, it's a safe short. And especially, so actually I typed this incorrectly, this should be a short. Especially considering the fact that the Fed is going to raise interest rates, and when people start to take their money out of the stock market, guess what stocks they tend to take their money out of first? That's right, penny stocks. So this is going to drop probably faster than it would if the Fed were not meeting this week. So again, if you got big balls, short this stock. Thank me later. Send me some money if you want. This should be a good trade. And last one, SBH. Alright, so SBH, I just wanted to go with a very... Okay, SBH, we're going to move on to stockcharts.com. SBH is a pure technical, non-gap play. People tend to like this. The people who signed up for my stock reading course will appreciate this trade. So here's what we got. Like I said in my stock reading course, we want to switch these to shorter time frames if we're swing trading. We want to look at the runes. We want to look at the Chaikin oscillator, and we want to look at the slow stochastics. So here we go with Sally Beauty Holdings. This is a company I actually spent a bit of money on when I was a teenager. I would go there and buy a hair bleach so I can bleach my hair completely white. Their company is a good company. The fundamentals are good. They have been increasing their revenue, And even if we hit a bear market, I really doubt that this company will take a big beating. The Aruns are very bullish. Check this out. Here was a buying signal. And as long as the green line stays above 70, we're still pretty good with momentum. So here was a buying signal, right about boom, right there. It would have been nice if we can get in 24, but we missed that. It doesn't mean we're too late. Check it out. Okay, I said this is not a gap play, and it really isn't. If you notice, this gap is clearly a continuation gap. You have a huge volume, just like we saw before, and you have a huge breakaway from the trading region. So ignore that, but the fact is, in my opinion, my theory, all right, I don't think anybody else on this planet has done as much research on gaps as I have. And I am of the opinion that all gaps are really area gaps, except for stocks that are going bankrupt, like ARO we just saw. All gaps are area gaps. That's my opinion. That's my theory. All right. All gaps are area gaps because the majority of gaps fill. And even if this gap is, okay, even at this time, around here in August, this gap was a breakaway or continuation gap, all right? It means that the stock is going to continue declining, and that's the right way to bet. You short the stock at this time. But if this company, Sally Beauty Holdings, is not going to go bankrupt, eventually this gap will fill. We don't know when it'll fill, but eventually it'll fill statistically. And it looks like that's what's going to happen. So what I'm saying is that our price target should be about 29.5 cents. Let that be the price target. We're at 27 now. If we move up to 29.5, that's a good profit. We've got the momentum. The Arun lines are telling us we're still holding that momentum. As you can see, the blue line, the shorter moving average, just crossed over the red line. We got another buying signal a little later than the Arun lines gave us that buying signal. But that gives us also an idea that of the momentum increasing, because as you can see, the blue line and the red line's distance is also increasing. Then we've got the Chaikin money oscillator, where we see money flowing into the stock. As it goes up and above zero, that's a strong buying signal. And this buying signal, I think, is even closer. Yep, it's even closer. It's like 3 days ago than this buying signal. So we've got 1, 2, 3 buying signals, and then a signal that's a little confusing, because what happened is we've hit what looks to be overvalued, but we've been in this region for like a month now. So this is not really telling us much, and this often occurs after a gap. We didn't see a gap here, but we did see a huge spike in price. What I recommend, if you got balls, like the ARO play, if you want to play that and this, just go ahead and buy it. If you're more conservative, well, wait until at least the black line, which is now at 82.57, wait until it drops below 80. Right? And that will probably happen, in my opinion. That'll happen after Wednesday, after the meeting. After the meeting, you'll probably see a drop in pretty much every stock, and I don't think we're to be entering a bear market. We might enter a bear market, but even if we do, this stock is going to be undervalued. Sorry, it's going to be undervalued. So it's going to be a good long-term buy. If you don't want to swing trade it, buy it, hold on to it. If you do want to swing trade, then after the meeting, if this drops, stay away. All right, look at the other ones. Look at the other picks. So again, here are the picks. Gold. I forget. Gap play. Penny stock. Value stock on the rise. What is BOT? Oh yeah, overvalued stock. All right. So we got 2 shorts. Gold I really think is a short, but a lot of people are always looking for lows in gold price, and eventually it'll bounce back. The general idea is that when the economy is looking dangerous, people put their money into gold. So it's really a confusing thing. The truth is I'm long on this and I'm short on gold itself. In that sense, I'm hedged. But I'm making more money on the short position than I am the long position, and I expect that to continue throughout the week. So everything else, go back through the video and review what you want to play this week. This week is going to be more volatile. So actually that brings me to a pretty good idea. I probably should have thought of this earlier. But this week is going to be pretty volatile. I never really recommend buying VXX because I hate this ETF. It's always dropping. But as you can see on Friday, it jumped. When the market's volatile, VXX jumps. And volatility doesn't always equate to fear. It equates simply to movements in the stock market. But when fear does occur, VXX jumps. So if you're not sure what you want to trade out of these lists, if you're not sure which way gold is going to go, for example, but you think like the market's going to be shaken up, you can always buy VXX. I don't like buying VXX. I've made money on VXX, but always from a short position, because when it spikes like this, it always drops. It's just a shitty ETF. It's poorly designed. It's not a stock. It's an ETF, which is supposed to mimic something, and you can look into the details of what it mimics. But the general idea is that it doesn't mimic what it should mimic correctly, and it's always going to drop. Even if the stock market has neutral volatility, VXX drops. So it's always a safe short, but it's also a dangerous long. It's also a dangerous short because it can jump like this when fear sets into the market, and that's probably what's going to happen. Check out what happened Friday. Look at that fear. Boom. Jumped up because people are freaking out about oil, freaking out about Russia and Turkey. They're freaking out about the next meeting and the interest rates rising in the next Fed meeting. So people are worried, and that means there's been a sell-off of a lot of stocks and a reinvestment into other things. And because it's the end of the year, for tax purposes, institutional investors are selling off lots and lots of stock, also buying stock. So lots of things are happening at this moment, and that's why I said this week is going to be an epic week. So when in doubt, if you know things are going to happen and you're not sure what's going to happen, buy a call option on VXX. Don't buy the ETF outright. It's just stupid. Buy a call option. It just came to my mind now. I might actually do that. I'm not sure yet, but I really think probably the best plays for next week are going to be shorting. Well, shorting this is going to be great because simply it's going bankrupt, and if the stock market does crash or have a correction, people are going to be taking their money out of penny stocks first. So this is probably our safest bet, short ARO. Some people, a lot of my viewers can't short stock. They don't have a margin account. In that case, buy something that's safe or buy VXX. And that's pretty much it. This video is longer than usual because, like I said, this week is going to be epic.